I think it's more important for, the average new home buyer or someone who's selling their property to be aware that, again, the transaction that you had in 2017 may have had tax ramifications so that you are prepared. So first and foremost, try not to go it alone. I think so many people think, I got this, I can do my own filing. If you are doing something other than an easy, a short form, then you probably need to consult a professional. Yeah. So it really is not a lot of money. I know we've got some great CPAs that contribute on this show. So you talking to a CPA is going to be cheaper in the long run than trying to manhandle it yourself.
Yeah, totally. And they're really not that expensive.
I think it's money well spent. Even you're not a business owner, you just bought a house. Now what? Again, there's going to be some tax benefits that you can take advantage of. Having access to your settlement statement, which I give duplicate copies of my settlement statements to clients, and I explain to them at the closing, when you have your taxes, pull this document out and bring it with you to a tax professional, because there will be things that you may be able to take advantage of, whether it's, interest tax deduction or real estate taxes that have been paid, other expenses that can add to your basis of the property. And you talk about basis and most people are like, what's that? Again, it's a term of art, but having a tax professional is going to help educate you along the way in your individual transactions as to what you need to be thinking about as to what builds your tax basis.
Absolutely. Now, what are the possible tax implications of selling a home?
Well, so it depends if it was a primary residence. If it's a primary residence, there is a tax exemption that offers that you can sell your house tax-free every 2 years as long as it was your primary residence, which means you can't rent it.
Sure.
So if it was a primary residence, you can pretty much sell it tax-free without even having to worry about the federal government, which is amazing. So the capital gains get reported to the IRS just as a function of the sale happening. So it triggers that there could be a tax ramification. I think that's the biggest variable and vulnerability that our homeowners have when they're selling properties that now are subject to capital gains, because they're not thinking about it. And if they don't have an accountant on call to discuss, hey, what is the tax liability going to be for me under these specific circumstances? Now you go and spend all of whatever money you've made.
Yeah.
You don't have the money earmarked, because again, that's one of the biggest problems that we see is that we don't collect for it at the closing. So the capital gains is something that you're going to see anything that's sold in 2017, this tax filing.
What can they deduct to lower that burden?
So, again, making sure that we've captured all the interest tax that they've been eligible to take advantage of, any real estate taxes, if they've been properly identifying all the expenses of carrying that property as capital improvements. So I think just having a good organized system is really helpful, and talking to an accountant when you're even interested in purchasing is probably the right step, so that they can give you some of those strategic ideas as to what you need to be doing, so that you're not going to find out later like, oh geez, well, I really don't know what I've put into the house for improvements, and how am I going to go back now and recreate it? So I think it's really just about being organized.